Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 May-June Paper 3-2 question number 1. This is the structured paper 3, which consists of 3 questions. Each of them will be of 25 marks, and the total time limit given for this paper is 1 hour and 30 minutes. Ideally, you should be spending about 30 minutes in order to solve each question, and in this video as well, we'll be attempting to solve this question number 1 within 30 minutes. So without any further delay, let's get started. A Social Club's financial year ends on 31st December. It also runs a cafe for its members. The markup of the cafe is 50%. So we add 50% to the cost and then calculate the selling price for our cafe. The balances of some accounts are shown as follows. So we have the balances at 31st December 2023 and 31st December 2022. So these will be our closing balances, whereas these will act as the opening balances. In this case, we have club equipment, cafe inventory, cafe trade payables, subscriptions, and the club expenses. The treasurer also prepared a summarized bank account for the year ended 31st December 2023. So this summarized bank account is equivalent to our receipts and payments account. So on the debit side, all of our receipts will be recorded, and on the credit side, all of our payments will be recorded. Okay. Then all the cafe sales are on a cash basis. The following information is also available for the year ended 31st December 2023. On 31st December 2023, the cafe section of the club was broken into. Some cash was stolen. Okay, so this is related to cash, which means that we'll have to prepare a cash account in order to calculate the amount of cash that was stolen. So within our cash account, on the debit side, we will record all of the cash inflows. On the credit side, we'll record all of the cash outflows. And in this case, I don't think we were given the opening and closing balances for cash. So we just need to record the inflows and outflows during the year. And in this case, some cash was stolen. So the stolen cash will act as the outflow in this case, which means that we need to record it on the credit side. And this will be the balancing figure for the cash account. Then after paying the cafe wages of 34,800 and cafe expenses of 15,500, the remaining cash, so all of these were paid in cash. So the cafe wages will act as our cash outflow, which we have to record on the credit side. So the wages of 34,800 and then the cafe expenses of 15,500. Then the remaining cash was banked. So in this case, we have the cafe receipts right here. So this 212,000 was now deposited into the bank account. So for the bank account, this will act as an inflow, whereas for the cash account, this will act as an outflow. So we need to record this on the credit side. We can write this as bank, and the amount will be 212,000. Then the cash register recorded the total cash sales for the year were 264,000. Since these were cash sales, we need to record it on the debit side of our cash account because this will act as an inflow. So we have the cash sales of 264,000. Then we have the subscriptions of 2,400 owing at 31st December 2022, which were irrecoverable. So these will be the irrecoverable debt during the year. Then the subscriptions of 1,600 prepaid at 31st December 2022, which is again the opening date, were fully refunded because some members did not renew their membership. So in this case, the 1,600 will be paid to the member who had prepaid at the opening date, but they did not renew their membership, which means that the club will not use this amount. They have to refund it back to the members. And this will have to be recorded on the debit side within our subscription account because whatever amount was received during the year would have been on the credit side. And since in this case, this 1,600 will be paid back to the member by the club, we have to record it on the opposite side. So this will go towards the debit side. Then we have information regarding the depreciation. And we have a coffee machine in the cafe purchased in 2020 for 3,000 was damaged. It is to be written off. So we do not have any other information related to cash. So that should be all for our cash account. We first need to get the total from the debit side. That is just going to be 264,000. And this will act as the total on the credit side as well. Now, in order to calculate the value for our cash that was stolen, we just take the total of 264,000 and then subtract these three amounts. So 264,000 minus 34,800 minus 15,500 minus 212,000, which results in the value of 1,700. So these are the cash stolen during the year. Alright, let's move towards the information regarding depreciation. Club equipment is depreciated at 15% per annum using the reducing balance method. Let's calculate the depreciation for club equipment. Okay. Since this is based on the reducing balance method, the general formula is net book value times the rate, and the formula for net book value is cost minus accumulated depreciation. So we can start with the value at the beginning of the year. For the club, it was 335,000 and the accumulated depreciation is 114,000. So we first start with the cost of 335,000. Then any purchases during the year will be recorded on the payment section of the bank account because we will have to pay for the new equipment that was purchased. And in this case for the club, we have it right here. A new club equipment worth 25,000 was paid during the year. And according to the depreciation policy, a full year's depreciation is provided in the year of purchase. So we need to charge the entire year's depreciation on this club equipment of 25,000. So we need to add it to the cost. In order to check for any disposals, we have to check the receipts section because any amount that is received by disposing the non-current asset will be recorded on the debit side of our bank account. And in this case, we only have cafe receipts and subscriptions, so we can understand that there was no disposal during the year. Now we can subtract our initial accumulated depreciation of 144,000 in order to get the net book value. And the rate given was 15%. So we just multiply this by 15%. And this gives the depreciation for the year on club equipment to have the value of 32,400. We then repeat the same process for cafe equipment. And for the cafe equipment, it is to be depreciated at 20% per annum using the straight line method. On the straight line method, we just multiply the cost of the non-current asset to the rate given. And in this case, the initial cost for cafe equipment is 36,000. We can just ignore the accumulated depreciation for now. So that will be 36,000. And again, we need to check for any purchases during the year on the payment section. And for the cafe equipment, we can see it right here. A new cafe equipment worth 4,500 was bought during the year. We need to add it to the cost. So plus 4,500. And we also need to incorporate the fifth information because this includes a coffee machine in the cafe, which is part of the cafe equipment. And it was purchased in 2020 for 3,000. So this was the initial cost, but it was damaged and it is to be written off. To be written off just means that we now exclude it from each of our statements. So we need to exclude it while charging depreciation as well. So we just subtract the 3,000. Then we need to multiply this by the given rate of 20%. This results in the depreciation for the year on cafe equipment to have the value of 7,500. Let's move towards the first section. We need to state two differences between a receipts and payments account and an income and expenditure account. So the very first difference is that receipts and payments account will record only the cash items, whereas income and expenditure account will record non-cash items such as depreciation. So only cash items are recorded, whereas for the income and expenditure account, non-cash items such as depreciation are recorded. For the second difference, within our receipts and payments account, we can record both items of the capital nature as well as revenue nature, whereas within the income and expenditure account, only the items of revenue nature are recorded. Let's write it down. Items of capital nature and revenue nature are recorded. And within the income and expenditure account, only items of revenue nature are recorded. Another difference could be that the receipts and payments account is similar to the summary of the bank statements, whereas the income and expenditure account is equivalent to the statement of profit or loss. That is all for the first part. Let's move towards the second one. We now need to prepare the CAFE's statement of profit or loss for the year ended 31st December 2023, showing the value of stolen cash in the expenses section. We've already calculated the value of stolen cash to be 1700. Now we need to include that within the expenses section. Okay, let's prepare it. This is for the CAFE. We're preparing the statement of profit or loss. And this is for the year ended 31st December 2023. Okay, we always start with revenue, but in this case, we do not have any information regarding revenue. Rather, we have been given the markup. And the markup for CAFE was 50%. So in order to calculate the revenue, the formula will be cost of sales times 1 plus markup, which in this case is 50%. So the first step will be to calculate the total of the cost of sales. So let's move towards the cost of sales section. We can start with the opening inventory. And the value of opening inventory will be given within our opening balances. For CAFE inventory, right here, the opening inventory is 11,200. Then we need to record all of our purchases. And we do not have the exact value for the purchases, but we do have the CAFE trade payables at the closing as well as the opening date, and we have the amount that was paid to the CAFE suppliers during the year. So from this information, we can easily calculate the purchases for the year. We always start with the payment made to supplier. So payment to supplier. Then we subtract the opening balance of the trade payables and add the closing balance of the trade payables. In this case, the payment to supplier was of 172,000. Then we have the opening balance of trade payables right here. The opening balance is 23,600. We subtract it. And we add the closing balance, that is 29,800. And this is just the equation that we prepare by following the format of purchases ledger control account. In this case, we do not have other entries such as discount or contrast, so we only focus on the payment made to supplier, the opening balance of trade payables, and the closing balance of the trade payables. So the total purchases during the year will be 172,000 minus 23,600 plus 29,800, which results in 178,200. This is the value for the purchases. Then we need to subtract the closing inventory. I don't think we were given any information regarding the closing inventory in this case. Oh, okay, we have been given the total cash sales. So it means that we need to calculate the cost of sales by using the formula for our markup, this one. And then we need to calculate the value for the closing inventory. Okay, let's record the revenue of 264,000, and we can record this value because we were told that all the CAFE sales are on a cash basis. Let's write it down. So we have 264,000 right here. The formula was that revenue should be equal to the cost of sales times 1 plus markup of 50%. We have the revenue of 264,000. So it means that the cost of sales is just going to be 264,000 divided by 1 plus 50%. And this will result in the value of 176,000. Let's write it down. Now for the closing inventory, we know that 176,000 will be equal to opening inventory plus purchases minus the closing inventory. We already have the values for the opening inventory and purchases. The opening inventory is of 11,200, purchases is of 178,200 minus the closing inventory. So the value for closing inventory will be 11,200 plus 178,200 minus 176,000. This results in the value of 13,400. So 13,400. Now we can easily calculate the gross profit. That will be 264,000 minus 176,000, which results in 88,000. All right. And in this case, I don't think we have any other income for the cafe. So we can just move towards the expenses section. And the very first expense that we need to include is the cash stolen of 1,700. Let's write it down. So minus expenses. The first one is cash stolen of 1,700. Then we've also calculated the depreciation on cafe equipment. Let's write it down. The depreciation on cafe equipment was of 7,500. Okay, we then have our cafe wages and cafe expenses. And we always need to check for any of the adjustments within our opening and closing balances. In this case, we do not have any expenses related to cafe. So we can just mention the amount of 34,800 as wages and 15,500 as the expenses. Let's write it down. So we have the wages of 34,800 and the expenses of 15,500. Then there is also this coffee machine that we need to write off during the year. But we cannot write off the cost. We need to write off its net book value. And in this case, the coffee machine of 3,000 was purchased in 2020. Currently, we are preparing the statement of profit or loss for the year ended 31st December 2023. And according to our policy, a full year's depreciation is provided in the year of purchase, none in the year of disposal. So we do not need to calculate any depreciation for the current year. We only need to calculate the depreciation for these 3 years. So the 3 years depreciation, since the cafe equipment is depreciated based on a straight line method, we can just calculate it at once. So we can start with the cost of 3,000 multiplied by the rate of depreciation 20%. This will give the depreciation of 1 year. If we multiply it by 3, we get the depreciation for 3 years. This results in the value of 1,800. So this acts as the accumulated depreciation. Now the net book value will be cost minus accumulated depreciation. The cost is 3,000. Accumulated depreciation is 1,800, which means the net book value is 1,200. So we need to write off this amount as the expense within our statement of profit or loss. Let's write it down. So 1,200, and this will be the coffee machine written off. Okay, that should be all for the expenses. Let's calculate the total. That will be the total of these 5 amounts. So 1,700 plus 7,500 plus 34,800 plus 15,500 plus 1,200, which results in the value of 60,700. Okay, we have the gross profit of 88,000, which means that there will be a profit. The profit for the year will be 88,000 minus 60,700, which results in 27,300. That will be all for our statement of profit or loss. And in this case, we have been given the working section. So you need to show these workings as well as these workings and the workings for your cash stolen as well as this one within the given box in order to get your markings correctly. So that's all for the second part. Let's move towards the third part of this question. We now need to prepare the club's income and expenditure account for the year ended 31st December 2023. Okay, so we have the club, we're preparing the income and expenditure account. And this is for the year ended 31st December 2023. And we will always start with the income section. The very first income for any questions regarding our club's income and expenditure account will be subscriptions for the year. And we need to prepare the subscriptions account in order to get this value. Alright, so I think we can prepare it right here. So for the subscriptions account, we always need to start with the opening balances. And we have the opening balances right here regarding the subscriptions owing and subscription prepaid. And in this case, I'm just going to write down the amounts and not the heading because that is not the important part. We just need to calculate the value that would be recorded within the subscriptions account under the heading of the income and expenditure account. And that will always go on the debit side. So on this part, the balance BD will refer to the opening balance of the subscriptions owing, which is 4,800. And the balance BD on this side will refer to the opening balance of the subscriptions prepaid, which is 4,000. Then for the subscriptions amount that was received during the year, we just need to check the receipts section of the summarized bank account. So that's 336,000, and this will always be recorded on the credit side under the heading of bank. So 336,000. Then we also have the irrecoverable debt of 2,400, which will always be recorded on the credit side. And we have the refund towards the customers. So the refund was of 1,600, and we've already categorized that this should be recorded on the debit side. So 1,600 right here. Now we can enter the closing balances. We have it right here. For the closing balance on the debit side, we record the closing balance of the prepaid subscriptions. So that will be 3,200. On the credit side, we will record the closing subscriptions owing. So 5,600. And in this case, the income and expenditure account heading will act as the balancing figure. We first need to calculate the total from our credit side, 4,000 plus 336,000 plus 2,400 plus 5,600, which results in the value of 348,000. Now, in order to get the value on our income and expenditure account, we take the total of 348,000, subtract 4,800, 1,600, and 3,200. So 348,000 minus 4,800 minus 1,600 minus 3,200. This results in the value of 338,400. So we need to record this amount within our income and expenditure account under the heading of subscriptions for the year. The next income we have is profit from cafe. And we calculated this amount to be 27,300. That should be all for our income. So let's calculate the total. 338,400 plus 27,300, which results in 365,700. Now we can move towards the expense section. The very first one will be the club expense. The amount paid during the year will be recorded within the payment section right here. 274,000. Then we also have the accrued and prepaid expenses. So we always start with the amount that was paid during the year. That will be 274,000. Then we can start with the opening prepaid. The opening prepaid will always be added. And we have the closing accrual, which will again be added. So that will be plus 3,900 plus 5,800. This results in the value of 283,700. Let's write it down. Then we've also calculated the depreciation on club equipment. Let's take a look above. So the depreciation on club equipment was of 32,400. Then we have the irrecoverable debt on subscriptions. And the amount for irrecoverable debt was of 2,400. That should be all for the expenses. Let's calculate the total. So that will be 283,700 plus 32,400 plus 2,400, which results in 318,500. In this case, we can clearly see that the total of income is greater than the total of the expenses, which means that there will be surplus. So surplus for the year will be 265,700 minus 318,500, which results in 47,200. That will be all for our income and expenditure account. Let's move towards the next part. Again, we have the working section right here, so you need to show all of your workings regarding the subscription as well as the club expenses and the depreciation within this box in order to get your markings correctly. Now we have been given the additional information. The committee members want to improve the security of the club. They have two options. Option 1 is to install a security system at a cost of 120,000, followed by an annual maintenance fee of 1,000, whereas option 2 is to recruit a daytime security guard at an annual salary of 30,000. We need to advise the committee members which is the better option by justifying our answer. And in this case, this is a 5 marks. 1 mark will be reserved for the decision. Then 2 marks will be for option 1, and it's better if you write 1 advantage and 1 disadvantages, and 2 marks will be for option 2. Let's start with option 1. The first advantage is that there is an annual maintenance fee of 1,000, which is quite minimal compared to the annual salary of 30,000. Let's write it down. The annual maintenance fee is minimal. So this is the advantage. Now the disadvantage is that the total of 120,000 will have to be paid in order to install this security system. And we have our summary for the bank statement where we can check the closing balance. The closing cash balance we have within the bank account is 116,600, which means that the club does not have enough cash to pay the whole amount. That will act as the disadvantage. Let's write it down. The club does not have enough cash to pay the whole amount, as it only has a cash balance of 116,600 at 31st December 2023. Now we can move towards option 2. Option 2 was to recruit a daytime security guard. The very first advantage is that the members may feel safer due to physical presence of a security guard. Let's write it down. Members may feel safer due to physical presence of a security guard. Whereas the disadvantage is that 30,000 annual salary will be a heavy financial burden to the club. Let's write it down. 30,000 annual salary will be a heavy burden to the club. Now, based on these comments, we'll have to make a final decision. So personally, I would advise the committee members to go ahead with option 1 because it is more reliable as there is no need for a human presence and also that option 2 will not provide a security guard at nighttime. So it means that the club is still subject to the threat at nighttime. That's why option 1 feels like a safer option. So option 1 seems to be a better option. As it is more reliable and covers security for nighttime as well. Unlike option 2. That is all for the fourth part, and that is all for this question as well. If you found this video useful, make sure that you like the video and leave a comment below, and make sure you hit the subscribe button and hit the bell icon so that you do not miss any of these videos in the future. Thank you.